my very first company, we were essentially doing background checks as a service for folks. And this is like, once again, like Logan Green, John Zimmer, like early like Lyft, Zimride days, those folks, Airbnb, this is when all those companies were coming out. We kind of ran out of money. I think we were pretty frugal, but like we ran out of money. We kind of ran out of steam in some ways too, and decided to shut the company down. And 8 months later, my consolation prize was that I was able to invest in Checker at a Y Combinator, and they crushed it.
So generally, I'm most focused on who the founder is, why they're solving this problem, and why now. So what is the founder market fit? Why does this person have a particular insight into the company that they're building? And why is this the right time to build it? Certainly. I mean, there are many different archetypes to how founders can succeed. And transparently, they're never single-threaded. It's always like a multifactorial equation. And if it wasn't, then this wouldn't be a job and this wouldn't be an industry, because it would just be so obvious that people who are insiders or outsiders or come from product or come from go-to-market or what have you will end up being the most successful, and therefore the whole industry would skew in that direction. And that's just not what you see in terms of success stories.
So super excited to have the wonderful Lainy Painter on the Entrepreneurial Excellence podcast today. She is one of my favorite VCs. Full disclosure, she also was one of the VCs who sort of led the round in my last company, Abstract Ops, and I got to know her really, really well there in the work we did together, in her strong belief in what we were doing and what we were trying to accomplish, the fantastic advice that she provided to us, and just frankly, just steadfast thoughtfulness in a lot of ways is how I think of Lainy in some ways, just being thoughtful in listening. And then also just someone who is one of the more impressive, I think, VCs that's out there in general overall, making fantastic investments for a wonderful VC firm, Craft Ventures, and is just seeing a ton. And so I'm so excited, Lainy, to have you on this discussion today so I can learn, and then hopefully the entrepreneurs listening to this can learn as well from you and the mistakes and things and successes that you've seen out there. So before we go any further, why don't you tell us a little bit about your background, what you've done, how you got into VC, and where that all went?
Well, Adam, thanks for having me. I'm very excited to do this with you today. So I started my career at Goldman Sachs. I worked in the technology, media, telecom group in the investment bank. So I got to work on IPOs and M&A transactions with the Silicon Valley darlings of the time, like Snapchat and PayPal and Zendesk. And then I moved on to the startup world, and I joined a company called Gainsight, which is customer success software.
They kind of created Gainsight, like made the name for like customer success software. They were the company who created that space almost.
That's exactly right. And it was a masterclass in basically identifying a need, creating a solution, evangelizing that solution, literally writing a book on customer success and explaining to people why after, decades of running their business in a different manner, they needed to really focus on retention and upsell as opposed to just new business, where historically most of the focus and most of the investment was on the net new sales side. So it was an incredible experience. And I learned a ton about, how to find a new category and then how to build into that new category.
And what did you see in Gainsight? Tell me if this is wrong, but Nick Mehta is the CEO, right? He's not the founder, but was a longtime CEO, and I think still is someone who I've had the pleasure of working with and getting to know a little bit. What are things? I mean, this is the Entrepreneurial Excellence podcast. Thinking back to your days there as being sort of an employee, and just I'm sure watching sort of what he's doing. Are there even insights just that you saw just at Gainsight from him and in the really excellent senior team he built that you're like, man, this is like every company should replicate this if they want to achieve a high level of success?
Yeah, well, Nick is truly incredible and someone who I learned a ton from and really, really admire. So I share that affection with you. I think there's always a challenge that people think that companies that succeed did everything right and companies that, maybe didn't hit the goals that they set out to did everything wrong. And the reality is always somewhere in between, that there are glimmers of greatness in everything and certainly imperfection in everything. So I hesitate to over extrapolate any given learning, but I will say that I have never seen anyone with the capacity to switch gears and keep as many balls in the air as Nick Mehta. His ability to, hold space for people issues and, becoming being a great place to work at the same time as driving product forward with the thousands of other things that were on his plate was truly second to none. And I don't think I've ever seen anyone do it quite as well as he does it.
Do you think that then, is that essentially, I mean, sort of what you're saying is he's just he's like a next level multitasker. Is that sort of the less sexy way to put it, or maybe more sexy way to put it? I don't know.
Perhaps actually the opposite. He is able to focus really, really hard on one thing and then context switch easily, but give you his full attention and give an issue its full attention when required.
And did he ever explain how he was able to do that? Like, did he dig in and like what made him good at that? Like, does he just has a great memory? He's able to go deep on a topic really quickly. Like, what are the traits that he has that other founders should either train themselves on, or that maybe you're just born with?
Oh man, some nature, some nurture for sure. I think it's a unique capacity of his to a large extent, but I also think it can be learned in terms of scheduling and having people help you take things off your plate that are non-essential in times of your day, things that weigh you down or take away from the handful of critical things that you need to manage at the same time. So he was really excellent at finding people that spiked in ways that he didn't spike to help support him and add to his capacity for sure.
So would you say in some ways then he was actually, so maybe once again, it's not multitasking, it's actually that he's a great delegator and identifier of talent. Is that maybe a better way to put it?
I think all of the above, to be honest with you. I think you need to have a little bit of all of those things and know when the right time to delegate is and know when the right time to focus on something is. Did
he also set, and I know we're gonna keep going on these other things, but I find like Nick so fascinating because he is such a successful, wonderful person. And was he also good, and this is a personal one that I'm struggling with as an entrepreneur myself, was he also really good at setting really clear goals for the team and the people he delegated to, sort of saying like, hey, look, I trust you, go do X, but here's X. Here's our agreed upon goals and outlines. Go do it, and hold those people to that. Was that a skill set, or maybe it wasn't necessary? Like this, I'm trying to get better at that personally because I think that's important, but maybe it's not.
Yeah, I think that was a strong suit of his for sure. And I think that comes with the long relationships and trusted lieutenants that have been by your side for really long stretches of time, and also the ability to mentor certain people into those roles over time, which again just takes a certain amount of capacity. You can't expect to mentor 10 people simultaneously into stretch roles. You can really only do it with one or two people. And so kind of picking your spots, picking where you need expertise, picking where you can mentor and grow someone into something that wasn't a skill set that they came in with, and knowing when to do what is, I think, very hard to teach, but when you see it.
Yep. Yeah, no, and then also sort of maybe the last part, but also moving into a new discussion to some extent, like how much did Gainsight take on Nick's personality? Like how much was it in a sense like his company related to his personality, his way of doing things? And yes, maybe he did it the nice way, but in the end, it's like my way or the highway, versus it being like, hey, like I want to gently leave space for other people, or leave a lot of space for other people to have ideas. Like how well did that work? And then of course, how does that relate to other startups too? Because I think at an early stage, and Gainsight isn't obviously not an early stage company at all anymore. I think a lot of startups are very much, they are the founder, the founder is them sort of thing. How much was that actually the case at Gain with Nick versus being more of an open play? I mean, so yeah, he mentored these people, he had people he trusted, but were they their own people? Or, in this, I don't want you to be critical of anyone, but were they their own people, or were they essentially able to think like Nick and be a voice for Nick when he couldn't be in the room, versus being sort of their own individual? And which one's better?
I view every startup, and I've seen this enough times, it's always a reflection of the founding team. It's always a reflection, particularly from a cultural perspective, of the people that were around the table initially. And so, yes, of course, Gainsight is a reflection of Nick, and Nick is still at the helm, and I'm sure it continues to be. But at the same time, I would actually say there was a really diverse set of skills and a very diverse set of backgrounds around the table that sort of by definition becomes very difficult to mirror exactly what someone else wants. And I view that as a big strength, as opposed to recruiting people from similar backgrounds that are more likely to be able to exactly replicate you and not push back against your priors. So transparently, I think it's a mix of both, but you'll always have that, underlying love of Taylor Swift that comes out.
Right. Sort of the shared fun or something as a team.
Yes. The childlike joy. Exactly.
And so how do you, I mean, when you think through all the investments, and at some point we got to come back to your background because we immediately went off topic, but want to get back to that. But because I think, but in like, how much does that lead to what you look for in founders? Like how do you as a venture capitalist understand the founder, their personality, the team they are able to recruit, build, train, all those things to find the next Nick Mehta in the next Gainsight versus not? Because it's of course not easy. You're a really wonderful, successful VC, but yet I bet your hit rate is only at best 10%, and that would be doing better than most VCs in the first place. Like, so what do you look for, and how do you help identify a team in people like Nick?
Certainly. I mean, there are many different archetypes to how founders can succeed. And transparently, they're never single threaded. It's always like a multifactorial equation. And if it wasn't, then this wouldn't be a job and this wouldn't be an industry, because it would just be so obvious that people who are insiders or outsiders or come from product or come from go to market or what have you will end up being the most successful, and therefore the whole industry would skew in that direction. And that's just not what you see in terms of success stories. So generally, I'm most focused on who the founder is, why they're solving this problem, and why now. So what is the founder market fit? Why does this person have a particular insight into the company that they're building? And why is this the right time to build it? And then is this person someone who's going to be able to rally a team to come with them, who's going to be able to recruit great people, identify great people, grow great people, retain great people over a long spectrum of time? And there are many different ways to be a great people leader. And so it's not as simple as someone who's outgoing or extroverted or someone who worked at a certain organization at a certain time. Those can be strong indicators that, you know, that person has seen greatness before. So they'll know what to look for, and they'll know where the bar is and how to set the bar high. But it is always a bit of a kind of a kaleidoscope, and you see what you can glean out of it.
And are there ways, I mean, if you think through how you try to dig into that, right? You're, as a VC, you get a pitch deck, you do a few phone calls, maybe you meet the team in person. Or it's still, and this is of course when it's sort of part of venture capitalism in a sense, is like it is a little bit more of an art than a science. You can't break it all down into a scientific thing. But are there things when you go back to your partner meetings and you talk through, hey, like this is what I looked for, this is what I saw. How confident can you be in a lot of those things? Because once again, so many startups go off the rails in so many different ways. What are there? Do you guys have like a ranking list? Like, hey, like I think, you know, this founder is this way, this founder is this way. This is the personality. These are issues I see potentially coming up. But yet out of all of that, I still think they have a chance of a multi-billion-dollar exit, and therefore it's worth our time. Or, hey, like it's not a fit for other reasons.
We don't have a ranking list. I have seen firms that do have like particular personality traits and how people skew in one direction or another. That's not something that Craft does. So it is much more of a question of how does this person and the traits that they're exhibiting match up with the type of business that they're going after? Is this going to be operationally intensive and in the weeds? Is this really starting as a research project that is, you know, we're going to figure out if there is a commercialization opportunity, and perhaps this person needs to be partnered with someone who's more talented in the commercialization side of things, and vice versa. So it is much more of a question of how does this individual and the personality traits that they're exhibiting match up with the type of product that they're building and the type of business that they're building, along with the rest of the founding team. How do those people complement each other, and how do they fill in each other's gaps, and do they spike in different ways such that we think they can be a strong partnership over time?
And then what have you seen, and do you guys do retros on like, hey, like this was our initial take on the founders and the market and all these other things, in a year, 2, 3, 4 years later, this is the actual situation. Do you guys do retros around that and try to identify learnings and then reapply those to new investments?
Yes, we do. We go back through and talk through what the investment case was at the time, what we were right about. And it's actually pretty common to identify risks ahead of time and then have those risks bear out. For example, we think this is a crowded market, but we think that this wedge is interesting enough to break out. That has proven to be wrong at times, right? Then that it was too noisy in order to make a product and company stand out. And then there were times when we didn't at all identify that the world was going to change in a way that we just had never expected. And in some ways, those are the much harder ones, the things that you never saw coming that end up being much harder in terms of incorporating those learnings on a go-forward basis. And I think the last 5 years have been more black swan events than I certainly expected. And so a lot of those risk factors were not necessarily written into the investment memos.
I would imagine if someone predicted the COVID pandemic in their investment memo, they should win an award. And I hope they bet the market properly on the public market side. But I mean, one of those things too is like, okay, so you're doing these retros, you're thinking through those items, and then when you look back at it, how does that lead to changes that you've taken into account? So like, and I'll walk through kind of three sort of pet peeves of mine to some extent, or like two big ones, right? A lot of founders have a reality distortion field. That can in some ways be a great thing, right? If you invest in the next Elon Musk or Steve Jobs, like, and they have a massive reality distortion field where they can literally create a market that just didn't exist before. That's amazing. That's not just a home run. It's like 100 home runs in one. But it also can destroy a company and destroy a team, or shiny object syndrome, right? Where founders go from one thing to the next and bounce around and they never buckle down and get one thing done. How do you think through those things, help identify them, pros and cons, or other big either red flags or traits that you're like, man, this is something that like, we'll take a bet on that insane person who just so believes in a world we can't even imagine that I want to take that bet.
The reality distortion field one is tricky because you're completely right. Sometimes it takes you to the moon, and sometimes it is the undoing of a company that could have been successful, but runs 1,000 miles per hour into a wall because of an inability to accept the playing field has changed. And I think that's the risk that VCs take, is that we are taking big swings. We are looking for people who are looking to bend the universe and make a dent in things, and so it just comes with the territory. And it is normally, as we discussed, there are risk factors, and that's a risk factor that you have to live with and try to suss out if they're open to feedback ahead of time, and if you do have an ability to sway to some extent. But at some point, if you're looking for visionaries, there's going to be some drawbacks to that quality. So the shiny object syndrome is another tricky one that's a double-edged sword. The reality is VCs are always looking for a very compelling why now and why the market is ready for something, what's changed. And if you look at the biggest tech companies that came out in the last couple of decades, they generally are, predicated around a big change in the ecosystem, whether that's on-prem to the cloud or the shift to mobile. So to some extent, having your head on a swivel, looking for the opportunity to pivot into something that's interesting or more compelling or more relevant to your customer base is actually a positive attribute. Obviously, doing that every 6 months and ping-ponging around and failing to make meaningful progress on any given idea is a drawback. But people that are willing and open to iterate and find the next thing and not get stuck on the sunk cost fallacy that they spent the last 6 months on something, and therefore they should continue to build in a linear progression, actually is also a great quality. So all of these things are tricky because in small doses, they're wonderful.
They are. And that's probably like a life, that probably is a truism for life in general. Like sugar is delicious, but only in small quantities. Lots of other things kind of have the same rule. But I'll actually push back a little bit on that, right? So I have maybe a counter thesis, which is actually that the most successful companies in the world largely, and you've probably done actually more studies on this than I have, but are largely the original idea that they launched with, right? Salesforce has literally been Salesforce with one core product that they sell. They have lots of add-ons now, but it's essentially the same core product that Benny Hoff created, 25 years ago or something. And Google clearly is literally still a search engine, and that is 99% of its revenue, or maybe only 90% now, but whatever it is, it's still a huge thing. Facebook, same thing. Instagram, essentially the same thing with a bunch of other junk thrown into it. So many of these companies have had a single idea that took off. They did great. They never pivoted, have never pivoted. In fact, have tried to pivot out of it and have essentially failed. Outside of Microsoft, right? Essentially everybody's failed, and maybe Amazon to some extent with AWS. It's very rare, I think, that you find companies that actually are able to successfully pivot, or maybe they don't talk about their original idea. I mean, I guess I'll give a counterexample to my example, which is like Lyft. So Lyft originally was Zim Rides, and Zim Rides was like getting a shared ride like between SF and LA. And I was lucky enough to meet the founders then and all that other stuff. And then they they did a hackathon because they needed to pivot, and they pivoted into Lyft. And that was, they kind of copied what Uber was starting to do, but like, fine, they pivoted into it, and they're a publicly traded company, right? Should it be a higher price? Who knows? Like, who cares about what it is, public market? I would love to have invested in them at the early stage and have it go public. Like, that would have been a huge win from a venture capital perspective. And I should have, I talked with founders back then. But so I guess there are counterexamples to that. And of course, Lyft doesn't talk a lot about the Zimride days, but I also don't think there are many companies that actually successfully pull that off. I mean, I don't know. So it's sort of a question to you, like, do you think that actually can occur where you're like, I'm going to do a huge pivot and it's going to lead me to a real successful outcome?
I think you can do a huge pivot and get to a really successful outcome. And I do think that to the extent that what the original thesis has been disproved, by far the best thing you can do is to pivot and find another thing to work on altogether and not get stuck on, the fact that it is slightly different or massively different from what you're originally working on. That being said, I also think there's a difference between a pivot and being flexible in terms of the mode of accomplishing what you wanted to accomplish. Yep. And I'll pick on Facebook because it's the most obvious. The original use case on a desktop, with the original blue Facebook versus, what that platform looks like today with WhatsApp and Instagram and mobile first and all of these new products over time are obviously not pivots. They're obviously still connecting people around the world with each other. But at the same time, there was no attachment to the original notion of how it was supposed to look.
That's sort of different than a pivot, right? Those are sort of add-ons and adjustments. And even what your point is like, hey, like there might be different go-to-market motions for a company, but their core thesis, part of my opinion on this is that basically a founder is, you invest in a founder, or not you, I'm saying generically VCs invest in a founder somewhat because that founder is hopefully the world's expert X, whatever it is, doesn't matter, AI, fintech, you name it, doesn't really matter. They're the world expert at it. So given the fact that they are the world's expert, pivoting into a whole new industry or different take on it is really tough, or would imply maybe they're not the right founder for that, right? Yep, maybe they were lucky enough to raise a ton of money early on with their original idea. Should they instead just give the money back, shut the company down, and then go back to the drawing board for a few years to figure out what the next big thing is? Is that better than a pivot?
I think it is entirely dependent on what the next idea is and what your customers are telling you. Frankly, as soon as you have a handful of customers that can tell you, I don't need you to do this, I need you to do that, following them and taking that advice wherever it leads you is generally the right idea.
Yep.
And if it doesn't lead you anywhere and you're hearing very little feedback, that's feedback in of itself that you probably have been barking up the wrong tree. But you can pull that thread for a while. And again, I think we can quarrel over the definition of a pivot, but you can follow that into different insights that you perhaps wouldn't have found otherwise.
Yep. No, that's all fair. So going back, I want to come back to we're going to keep talking about entrepreneurs a lot, but I want to come back to like your own story in some ways. Like, tell me more. Okay. So you're at Gainsight, and then why leave Gainsight and go, Gainsight's still running, doing well. I forget, is Gainsight public now? Are they publicly traded? Or
they were acquired by a private equity fund.
Okay, that explains it. I was wondering what. Okay, so but you left before even that acquisition, right? So I'm sure you had equity. Hopefully, it was a nice exit for you as well. But like, you could have stayed longer, probably continue to move up with internally, things like that. What made you decide to do your own personal pivot and say, you know what, I'm going to go into the finance sphere or venture capital sphere?
Yeah, I think of kind of true finance, where I started my career in startups, and then ventures sort of being in the middle. So it was sort of a reversion to the mean, if you will. And I was really excited about getting involved with companies at an earlier stage. I knew what great looked like. I knew what these companies that were able to go public or were planning to go public in 1, 2, 3, 4, 5 years looked like along the spectrum of their growth. And I wanted to do that full time. So Battery had actually been the seed investor in Gainsight. So I joined Battery Ventures as a growth investor, and I cut my teeth on the first time actually investing and getting to have an inside look at a bunch of different companies and how they all operate simultaneously.
In when you're at Battery, what are some of the key things that you like kind of learned, took away, models that they tried to use to, growth stage is a little bit later, so maybe it's much more of a spreadsheet exercise, but like, what were things you were thinking about for what still makes for a great company and great entrepreneur and in some ways great leadership? And I'll say that, yes, growth stage, I think please correct me if I'm wrong, but like tends to be more of a spreadsheet exercise. At the same time, you look at publicly traded companies, they fire a bad CEO, the stock pops, or they bring in, Robert Iger, right? Roger Iger, right? Comes back to Disney, stock pops because like the Godfather's coming back to go fix all their problems. It hasn't worked out quite that way, but like there's still obviously this idea of sort of the great man or woman leader at a company who can make a massive difference even at a later stage. So how much was that something that you guys looked at Battery and thought about?
Certainly growth investing is a very like rigorous process that is relatively formulaic. There are certain inputs that tend to indicate that a company is going to continue to grow, continue to succeed, and continue to make their customers very happy. But I will say more so than anything, and this is true at every stage of investing, customer feedback is what trumps everything. Like, is this a tool that you love using? Is this a tool that you use every day? Does this tool replace several tools that you're using? If someone was to take this away from you, what would you do? If they tripled the price, what would you do? These are the sorts of questions that you learn to ask, and the answers end up being very revealing over time, that there are certain types of products and certain types of platforms that people are really passionate about. And you'll kind of see that come through the numbers over time, that when people are a little bit lukewarm, when budgets start to get cut, that's the first tool to go, because there's no one pounding the table saying, I can't do my job every day. I use this platform. This is like mission critical to me. So we need to protect this. And that is the sort of feedback that you're looking for up and down the stack. And that's really even true at the seed, even when it's a very early and very, very early idea. Is someone really passionate about your project? Because I would much rather, as an investor, see 10 people pounding the table than 100 people paying. But I have that. Yeah, I like that. Yeah.
And what do you think then? So a few questions here. One is like, one I have a comment in a sense, like it made me smile when you said some of the questions that you guys asked that you guys asked at Battery, and I'm sure probably still at Craft. Because those are the questions I do these testimonial videos with our customers. And we have about 20 of them, 25 of them, I think, on our website right now. And those are all the questions I ask. I'm like, what happens if we disappeared? How would you feel? Like, it's literally that question. And luckily, obviously, these are testimonials, so these are happy customers, certainly, but they're like, we wouldn't know what to do. We'd literally be lost. And I love that. Like, that makes me happy. And they stick around for a long time. We have a really long lifetime customer lifetime value, all the other good stuff that goes into it, and relatively low churn. But so that made me smile. So, but the question for you then is like, does this lead then to maybe a question about like sort of product and the founder's ability or an entrepreneur's ability to build a delightful product that customers really love? And that's a really different skill set, right? You might invest in someone, they're straight out of Stanford engineering, whatever, have all the credentials in the world, don't actually even understand what it means to create delight. How do you think through that as one of the key skill sets of an entrepreneur?
Yeah, the ability to listen to customers doesn't necessarily need to come from any given background. And I do think it can be learned over time. You can get better at it. But customer centricity is, and to me, even as an early stage investor, one of the questions I like to ask entrepreneurs is, how are you thinking about charging people if you haven't started yet? Because transparently, if someone doesn't want to pay for something that you're building, that's information that is great to have as quickly as possible. And to wait months or years to find out that actually this is just not something someone values enough to part with money to, or to go ask their manager or go ask their CFO for budget to go do this. All of that is information that I want to gather as quickly as possible. And so it's not necessarily PM experience or being a great customer interviewer that ultimately matters. If you're passionate about the problem and you're thinking about ways to solve it, and it's a problem that's meaningful enough that someone's willing to part with dollars, you can get all that information quite quickly out of people.
Yeah, no, that's a great point. And then what do you, in when you though talk to a founder and are talking with them and try to understand their own, whether I should invest in them and like, will they be a great founder? I mean, how good, going back to the Nick Mehta sort of Uber example of a great sort of leader, how what do you look for in qualities, right? If you're just doing a Zoom call to decide to invest, how do you figure out if someone acting? Of course, every founder's gonna be like, I'm super passionate about this problem. I'm so passionate. It needs to be solved. It's riding a wave that's going to change the whole world. All the usual things that a founder's going to say. How do you pick apart whether they're real or bullshitting, basically?
There is a level of excitement that does come across when someone is really keen on a problem and they have a really strong depth of knowledge in the overall sector. And admittedly, as a generalist investor, I may not know everything about a certain industry on the first call, but by the third call, there should be a depth of information that I can bring to bear, that the questions are such that the responses require a depth of experience and a depth of research that is an indication that someone is really excited and has been deeply thoughtful and has had a lot of these customer conversations that we're talking about. And sometimes it's, I have a hypothesis and this is where I think this is going. And this is why I've done these 40 customer calls. And this is some of the information that I've heard. And that is a leading indicator, and there's no such thing as a sure thing. But those are some of the pieces of information that we can tease out over time.
I couldn't agree more. In fact, those are things that I look at. I think my best investments have been almost those exact sort of ones where I've gotten into know. So I'll give sort of two examples. I mean, one, a great entrepreneur, Roger Lee, who's the founder of Human Interest. He and I sat down for coffee and started talking about his idea, what he was doing. And this was totally different. He used to be in like the web design space sort of thing. Not quite that, but something in that range. And he's like, hey, I want to start a 401k company. It's like, what are you talking about? That's not your skill set. And then he's like, oh, and I've also now taken like the Series 7 in like all the state compliance things, because he had to basically register in every single state. And he's like, I studied for the test. I took the test. I passed it all in like 3 weeks, which of course, like I'm sure like for a lot of people, they never pass. And I'm like, yeah, you're clearly passionate about this. You actually were willing to like go back to school basically, except teach yourself how to do this, pass these things, go deep in it. And then of course it was riding what I viewed as a major trend, and it's become a really successful investment for me. And then another more recent one is there's an AI company. I've done very few AI investments because of course it's like all hypey right now, but I've spent a bunch of time with the founder and he just can't help but only talk about this. And a perfect example was he actually was over at my house at a small house party on Friday. And it was mostly actually parents with kids and stuff like that, right? And he shows up, and within 5 minutes of him being here, his laptop was out and had people surrounding him, and he was giving a demo of his product. And like, this is like a Friday, like happy hour. And I'm like, I literally was like, this is why I invested, is because you're here to socialize and you literally have your laptop out and showing people a demo and everyone's asking you detailed questions. You're going deep on it. This is why it's helping. This is why it's going, all that other stuff. And to me, those are the sorts of founders you really want to back, because they can't help but think about their product and know all the answers. I mean, they might not be right, but they've thought through all the variations of things that people might push them on.
That's exactly right. And it's that intellectual curiosity and digging into a sector, maybe that they came out of, maybe that they've worked in previously, or maybe that has just been itching at them because they had some sort of interaction for the first time and they're like, I gotta fix this. This is just not tenable. And so I think there's more than one ways to light that fire, but I think we're both talking about that same fire that lives within great founders.
Yes, 100%. And then, so going back, so you're at Battery, you decide to leave Battery. You decide you want to go into a different type of investing. What made you decide to make that switch? Why craft? And walk us through sort of that thought process. And by the way, like I'm asking sort of, I think your personal story is really interesting because there's so many different ways to be an entrepreneur. It's not just, I'm going to go start a business. Each individual out there has their own personal entrepreneurial journey where you take control of your own career in deciding what direction you want to take it and why you make those decisions. And so I think your journey is just as entrepreneurial, making a name for yourself in your own way as any founder who we like to raise up and be like, oh my God, you took a company public. It doesn't matter. Like there's so many different ways to be an entrepreneur. So that's why I think finding it interesting, of course, then we go on a ton of different topics after that. But why craft and why?
Well, it's funny you mentioned the career path thing, because when my senior year of college, I did a ton of interviews with alumni that were 5 to 20 years out of college, and basically wanted to ask them at every junction of their career, maybe ones that never made it onto LinkedIn because you got that job offer that you didn't take and you decided to stay at the existing firm, and maybe the ones that you did that looked like huge pivots, but maybe they didn't feel like that at the time, or maybe they did. It's such a fascinating exploration with people to understand, how they were thinking about what the alternatives were at the time. But to answer your specific question,
hold on. I want to dig in on that really quickly. So two things. One, what are key things that you learned from that? Two, how many of your colleagues in college you think did the same thing? And basically what you're describing is you were intentional about the career you wanted to have, which I think few people are sadly all that intentional about things in life in general. They sort of just go where the breeze blows them. And that leads to probably a lot of unhappiness. And that's not the scope of this podcast, but like, I do think that leads, having a lack of intentionality is a dangerous way to go about life, I think, at least for overall happiness. And so like, yeah, I mean, like how many of your colleagues, like that's so impressive. You as a senior in college or whatever, calling up alumni and these probably senior people, like, can I talk to you? Like that's scary for a lot of people. And you're calling these pretty senior people up and chatting with them.
It was actually quite a lot of fun. And I think it's a life learning that nobody asks. And so
no one asks
when
questions.
You generally get yeses. And particularly when it's something fun that people want to, be a part of it. I made cool visualization using Lucid Chart, which was, early stage startup at the time that I was really excited to play around with as a visual thinker. So I did it on my own, and it was a project really to reveal to me what I felt like I was blind to be honest with you. The path from undergraduate to first job is relatively well trodden. There's generally campus recruiters and huge swaths of people, but then it very quickly becomes a very nebulous path where you need to figure out your own interests. And at the same time that you want to optimize for optionality, you can't really be an expert in anything if you maintain optionality over long stretches of time. And so at some point you have to take the leap and commit. And I just felt like I was missing a ton of context on people's journeys, that the most obvious ones were someone who, graduated and spent 15 years rising to the top of the ranks at the first organization that they joined. But even that probably was filled with years of questions of whether or not they should stay or go, and alternative offers along the way that people are, I think, one, reticent to speak about for obvious reasons of loyalty with the companies that they do work for or ended up not working for. But I also just think it's not public either. You're in their, individual sphere and like their personal board of directors that you get the call when they're contemplating a major change, or you just totally miss out on that context on people's lives. And so, asking those questions really helped me understand what people actually liked and didn't like about the various things that they did, and how that drove them on to make some huge changes from like finance to the music industry or music management and those sorts of things. Like, what was it that you were searching for, and how did you get comfortable making such a massive transformation in your life with, this, once you leave, are you risking it all? You'll never be able to get back in. And how do you make yourself comfortable taking those sorts of risks? So it was a project that was really fun and impactful for me.
Have you stayed in touch with a lot of those people?
I have. I know a lot of them kind of more casually. So I went to William & Mary for undergraduate, and there's not a massive swath of alumni that go into finance over time. So we're all sort of loosely tied to each other. And I'm extremely, extremely grateful for everything that they did for me and helped me along my path, and try to pay it forward myself.
Which is awesome. I mean, we should all do that. And then, what did that learning then you make that decision you want to leave Battery?
Yeah, so to be honest with you, the move from Battery to Craft is much more similar than some other moves that I've made in my career, because investing is all along a spectrum. I knew that I wanted to go earlier stage. I knew that, the later stage that you invest, generally your involvement is much lower with the companies. Generally there's a executive team in place and people are humming along. And if people need you to jump in on a day-to-day basis, something has gone truly horribly wrong in the business, which is okay. It happens sometimes, but on a day-to-day basis, there's just not as much for investors to do. And I really liked the personal relationships of being much more involved in the major strategic decisions and pivots and product decisions that were being made at the earlier stage. So I knew I wanted to work with earlier stage founders. And then Craft at the time was just kind of investing out of our first fund and was very much a startup in of itself, where we were asking questions like, what is a craft deal? What do we stand for? How do we want founders to know us? What is going to be our public facing brand? And so getting to be, a part of an organization, that early was very fun to do individually and then also with startups.
Well, in actually what that highlights in some ways is people like to think about an entrepreneur being someone starting a traditional like business, right? The truth is There entrepreneurs come in every shape and stripe, and you name it. And you have David Sachs and you and other folks like at Craft, essentially being entrepreneurs, right? It's an entrepreneurial effort to start a venture firm and then go through that entire journey yourselves. Like, what were the lessons that you think you could even apply to other startups that you see? Like, hey, like we went through this, we made I'm sure you made plenty of mistakes. My guess is a lot of times what I find with VCs are a little bit like doctors. They're really good at giving advice. They're not as great listening to their own advice. But what are things that you saw or lessons you learned in the creation of Craft that you think are things folks should emulate or potentially avoid?
Oh, yes. VCs are definitely like doctors, and we definitely do not take our own advice in terms of clear divisions of roles and HR and all sorts of functions that most firms are not built the way that we would tell our startups to build themselves. Ultimately, I think the interesting thing, coming back to actually the Gainsight example as well, is that brand matters and brand comes built up from the very first day. And it's an old truism that it takes a lifetime to build a reputation and a decision an hour or a day to ruin it all. And so, choosing values, choosing, conscious brand image, and then living that every single day is, critical as a venture firm and also critical as a startup.
And actually, I'm kind of glad you said part of that I was expecting. I thought you might say that, which is basically like an area that I think founders don't spend time on. And I think they fail at in many cases for some good reasons, but I think that founders don't take into account the need to build a brand and to start marketing almost on day one. Once again, it's because, hey, look, you're not a marketer. You're a founder who's a technical founder, or you have some other expertise in a bunch of different areas. And you kind of be like, oh, we need to build our product before I can go sell it and get market feedback. I just think that is personally a completely backwards way to build. I mean, it makes sense. It's sort of the logical flow that you think, oh, I build a product, then people will show up. Then I start marketing it because then I have testimonials, and then it will get big because everyone's going to talk about it, and it'll be like product-led growth. I have a personal opinion. It's almost the other way around. And I don't know if that was sort of the case for Craft to some extent, right? You started some marketing. You had David Sachs with a good name, but he's obviously become way more famous over the past, two-ish, 3 years. How is that dynamic of thinking, hey, we need to think about our brand and who we are and what that looks like and what founders tell other founders, our target market, right? Our ICP being founders, what they tell us about Craft. How has that changed over time or been a key part of the firm's growth?
Yeah, I always say, like, if you don't tell your own story, someone else is going to tell it for you. And I think that is true across industries, across time, across many different vectors. And if you don't have down pat, how you want to be viewed and how you view yourself, you're really leaving a whole lot up to the market
and hoping that they come to a positive conclusion and hoping that they come to the same conclusion that you would have come to, which feels like an enormously dangerous thing to do with something so important. I forgot the question that you asked.
The question was just about sort of marketing in overall, but then where does that lead? What did that lead to Craft as well? Like, how did that the name that essentially David, I guess, has built over 20 plus years or whatever, right, led to, hey, like a podcast that is now, of course, blown up and become huge as well, which I'm sure now accrues value to Craft the business as well. Like his individual, who he is accrued value there. And how has that helped the firm in made your job easier or maybe harder? I don't know, but like in different ways. And how should founders once again think about that themselves in their sort of own marketing and brand journey?
So we've always been operator first. So every single person at Craft, from GP down to associate, has worked at a startup, worked at a unicorn startup in a various roles. Some people were heads of product or sales leaders or CEO, co-founder in the case of David with Yammer and Jeff with StubHub. But in general, the DNA is get your hands dirty. We've done this before, and we would never pretend to have seen every situation that people are in, but hopefully we've seen analogous situations, and hopefully we're able to help and dig in specifically. And so a lot of the ethos has been like, we're there when you ask us to be there, and we're happy to get our hands dirty. As the firm has grown, I think the thing that has evolved a lot over the last couple of years is we've added headcount to be able to continue to support companies at scale, added a whole lot in terms of building out a full platform team, building out recruiting support, legal support, government relations support down on the line, because we really want to be the sort of first call and also that extra hand of someone that you couldn't really afford to hire at the seed or Series A stage, but you can get a ton of value from on a fractional basis. So that has been the massive transformation for us over the last couple of years.
And I mean, this, you may not be able to talk about this, but I mean, I'd love to sort of understand how you thought through as a firm, and then advice that you give to your startups about how they think through those sorts of growth questions, right? Because it's very easy in some cases for companies to say, okay, look, we have money, and who knows, maybe some of the decisions you guys made correlated with raising your next big fund or whatever. Like, okay, we now have a lot of money coming in the door. Let's go build these other things out because that makes more value for founders, but it of course increases cost. It's sort of the same question that I have as a founder and entrepreneur, and I'm sure most people do. It's like, hey, we have money coming in the door. How do we spend this the right way? Where do we make the right investments that is going to lead to a legitimate payoff? It's sort of the same thing in a VC firm, right? So the stuff you just described, there's obviously a hope for payback on that. And I don't know how you guys even measure it, but it's sort of a question either about craft, but also just about how you give the advice to scaling founders about where to invest, because it can be very easy. You know, Kraft just wrote you a check for $20 million. You're like, we're rich. We got all this money in the bank. I will say it's one of the weirdest things when a VC firm wires you all this money. You're suddenly this bank account, you're a struggling founder, and now there's millions of dollars that you essentially can control and do whatever you want with. I mean, within reason, of course, but people, a lot of founders appropriate those funds, not in an illegal way, to be clear, but like they spend it the wrong way because they feel like they have it and it's almost forced to spend it. So how do you tell them where to spend it? How do you caution them against overspending and not going above where they should be? Like, how do you help them think through that?
Yeah. My view is that time is the only thing that matters to a startup. And time is the thing that allows you to find that new customer, to build that new feature, to iterate and learn from the feedback that you've gotten from your existing customers. And that is true for a pre-product business as much as it is for a business that has 100 million in revenue. As long as you are unprofitable, you are racing against the clock. And if you are spending less, you can live to fight another day. And there's always something new you can try, always something to do, as long as you give yourself the time and the flexibility to figure things out. And so I think when people run into trouble, it's because they thought that there was a shortcut, that if they just hired that person with this expertise in product marketing, or that if we could just have this one person, it would change everything. And I've actually never seen that bear out. I've actually never seen that one incremental hire transform an organization. On the contrary, it's actually more like, we have so many leads, our sales reps don't know what to do with them. Okay, so we can add another sales headcount because everyone is so slammed and so busy. It's never that this person's going to magically create business that there wasn't business before. It's much more spreading out, work amongst other people. And so the kind of hierarchy to me is just, all things considered, time is the most precious, because time is the one thing that you'll just never be able to get back, because there will be ups and downs, and it is a roller coaster ride, and no one expects things to be perfect and up and to the right at all time. But if you have cash in the bank, live to fight another day.
And is that also sort of not just cash in the bank, right? Going back to our point about pivoting, it's cash in the bank plus some level of customer excitement and interest. And if you have those two things, then maybe you're too early for the market still, but you just need to wait for the market to catch up, or things like that. I mean, and I'll use a personal anecdote as well for myself. I mean, my very first company, we were essentially doing background checks as a service for folks. And this is like, once again, I like Logan Green, John Zimmer, like early like Lyft, Zimride days, those folks, Airbnb, this is when all those companies were coming out. We kind of ran out of money. I think we were pretty frugal, but like we ran out of money. We kind of ran out of steam in some ways too, and decided to shut the company down. And 8 months later, my consolation prize was that I was able to invest in Checker out of Y Combinator, and they crushed it. And they were doing exactly, there was an API for background checks. That was literally what we were up to. We had the market. We were in there before them, but we ran out of money and energy to go make that happen. And like, yeah, I'll make some good money in my investment, but it's a lot different than if I were the founder of the company. But at the same time, like, should we have pivoted? Because, we had some excitement from customers. Like, what is the right trade-off between, because time is so precious. So do you waste your time doing a product that's not working, or do you stick around long enough to see it take off?
Well, let me ask you, because it's pretty uncommon for a founder to sunset an idea and then invest in a company that's doing the same thing 8 months later. What was it that you saw that gave you conviction to invest in them when recently you felt like it was time to pack
Yeah,
up?
no, I mean, I'd spent so much time thinking about that market, and I knew this was a really exciting big market. And so that's why I was like, I know this will be a big idea. This is needed. It was pretty clear that to me that these companies like Airbnb, Lyft, Uber, all these companies were going to be big. No idea how, of course, how big they actually became. And if I were a better venture, investor at that time, I would have gone into put money into all of them too. But the thesis, it was sort of riding a new wave of this sort of sharing economy. And how do you create, the whole thesis was how do you create trust in this world where you're now transacting with individuals who you don't otherwise, there's no organization verifying who they are, right? You're getting into some stranger's car, you're sleeping in some stranger's bed. It's different than a hotel or a taxi. And so that's why I was like excited by it. But we ran out of money, and more important, really, the team ran out of energy to keep pushing the idea. And so it just didn't make sense to keep that going. And then I heard the YC demo pitch day for Checker, and I was like, oh, like this is exactly right.
That's amazing. It's very hard to back another company after you've done it yourself and it didn't work out. So hats off to you for still identifying that it was the right thing to push after.
Thank you. So, well, you spend a lot of time knowing a lot about the market, so you have to be.
Usually that means scar tissue. Usually that means you just can't look at it anymore.
I don't want to overstate my own qualities. I have a lot of failures, but one thing I try to be is relatively honest to myself about like things that I've gotten wrong and where I can change and where we should rethink things. So even right now with my company Levy, I'm trying to rethink what does it mean to be a manager. What does it mean to be training someone? How does that all work? And this is something that we've been around for a year. I mean, like the fact that we did something a year ago, like just because we're quickly trying to get things started, shouldn't have any impact on our decisions today. Yet it does for a lot of people in a lot of organizations. Like, well, we've always done it this way. We've been around a year. Like, no, and we're going to do something different in a year from now because we need to keep changing and iterating. And it's really tough for, I think, founders and any individuals, not just founders, to do things. It's like, you get stuck in your ways and it's really hard to change and to admit your failure, but yet recognize there's something new on the horizon.
Well, and it's exhausting to constantly be iterating on yourself, on the company, on the way that you do things. Like it's much easier to go with inertia and accept the thing instead of rethinking it. And actually, I think it's one of the things I most admire Shopify for doing is I think Toby is, a big fan of the sort of blow it all up and start again mindset that I think is critical if you want to continue to push and be somewhere meaningfully different in a couple of years.
So actually that might be a perfect segue into sort of slowly getting towards the end, which is like, what are the qualities, either one specific thing that you would say that every entrepreneur should try to emulate or avoid doing, or other qualities, just maybe a few qualities in general, like, look, this is the most successful ones, the people that you will back no matter what, if you could get all the information in a perfect world, what do those things look like?
Oh man, it's just gritty. You just have to have a whole lot of grit. There is no sugarcoating that starting a business, running a business, scaling a business is really, really hard. And yes, there are good days and exciting high highs, but there are low lows too. And got to pick yourself back up and keep going. And it's just not possible to continue to do that day after day, year after year, unless you have a whole lot of grit.
Do you think grit, is that tied with a level of optimism to some extent, or maybe the opposite? I know like some of the best founders in the world are some of the most like depressed, high anxiety people I know too, because they're able to push themselves. But like, what is the level that just like stick in it and stick around and have that grit, right? I mean, for me, I tell people a lot in phone calls, like I'm a 4-time founder, right? That probably means I'm like certifiably crazy, but I don't think I am overall, but like it probably does to some extent. And like, what are those qualities? Is that like part of it? It's like, hey, I have grit, but I don't know, maybe I just ignore and forget the really bad days for me and I just like forget what happened. So you look for grit, but are there other personality traits as well? Or is that the main like, hey, you have grit, can you stick with this?
Grit, receptiveness to feedback. You need to have a lot of confidence, but also the ability to, wiggle a bit and have some flexibility in terms of how you accomplish the goal that you're very set on achieving, because it won't be the exact same way that you expected it to be from the beginning. There will be changes to the market or changes to the product or changes to what your customer base needs. And so there needs to be this kind of rare combination of grit and flexibility that allow you to stick with it, but let it change a little bit as you go along.
And do you think one other one, just not put words directly in your mouth, but sort of, do you think like curiosity is a big one too? Just the willingness as a founder to ask all those questions, to want to go deeper with customers, to call up people who are not in your space or you're too scared to ask, just like you did when you're starting your career search, and say, hey, like, I want to learn more about what you know, and being willing to do that. Is that part of it too?
Absolutely. And I would go so far as to say almost shameless curiosity. You have to be relentless in what you want to learn and flexible in how you end up learning it. But it does mean generally calling in favors, cold calling, figuring out what you want to do. And if that is uncomfortable, I mean, it almost can't be uncomfortable. It has to just be so normalized that it doesn't even cross your mind that this would be an odd thing to do.
Yes, so true. And on that note, not that you want everyone bombarding your inbox, how can people get in touch with you, Lainy, if they want to learn more about the stuff we've talked about today? Maybe not necessarily pitch you, but pitch you if that's what they want to get into. How should folks find you?
Yeah, you can reach me at lainy@craftventures.com. I'm on LinkedIn and Twitter as well, but direct email works well. And that's actually true amongst virtually any part of life. And you'll be shocked by how many people you can reach by figuring out what the email formula is and shooting them a note and seeing if they respond. The hit rate is much, much higher than you might expect. And, worst case scenario, they hit archive. And I'm the worst for it.
I love it. I mean, I'm smiling because I used to have like an email permutation thing that I used. This is like 10 years ago. And I'd figure out what the email was and just ask people questions and be like, hey, like, can we talk? And so many people will say yes, right? Especially if it's not a sales pitch for something, like, I want to learn from you. And yes, you might end up pitching something, some idea or another, but learning is huge. So Lainy, thank you so much. It's always a pleasure. Such a joy to have you in my network and people I can talk to and ask questions to as well and learn from. So thank you so much for being on the show today. I really, really appreciate it.
Thanks, Adam. It was so much fun to hang out with you for an hour, and we'll do this again sometime.